Nominee versus legal heir. Who really gets the insurance money in India? When a policyholder passes away, many assume that the nominee listed in the insurance policy automatically becomes the rightful owner of the insurance payout. However, Indian law draws a clear distinction between a nominee and a legal heir, and understanding this difference is essential to avoid future disputes. Why this distinction is important? The insurance company's role ends once it pays the claim amount to the nominee. But this doesn't mean the nominee is the final owner of the money. In most cases, the nominee is merely a custodian or trustee holding the funds on behalf of the legal heirs. If the nominee is not a legal heir, they are legally obligated to transfer the money to the rightful heirs. Who is a nominee? A nominee is someone the policyholder appoints to receive the insurance proceeds after their death. According to Section 39 of the Insurance Act 1938, the insurer must pay the sum assured to the nominee. However, unless the nominee is also a legal heir, they do not have ownership rights over the money. Their role is to safeguard the funds until they are distributed to the legal heirs. Who are legal heirs? Legal heirs are individuals entitled to inherit the deceased's assets under succession laws. These laws vary based on religion. For Hindus, Class 1 heirs include the spouse, children, and mother. For Muslims, inheritance is governed by personal law, with specific shares for each heir. For Christians and Parsis, governed by the Indian Succession Act 1925. Even separated spouses may still be considered legal heirs unless legally divorced. Stepchildren, however, are not legal heirs unless formally adopted. When do conflicts arise? Disputes often occur when the nominee and legal heirs are different individuals. For example, if a man nominates his brother but is survived by a wife and children, the legal heirs can challenge the nominee's claim. In joint families, multiple heirs may be entitled to equal shares, leading to further complications if the nominee refuses to distribute the funds. How can you avoid disputes? To prevent confusion and legal battles, align your nominee with your legal heirs if possible. Create a valid will that clearly outlines how your assets, including insurance proceeds, should be distributed. Update your nominations after major life events like marriage, divorce, or the birth of a child. Final takeaway: plan your estate wisely. While a nominee helps in the smooth release of insurance funds, the final rights lie with the legal heirs. A well-drafted will and regular updates to nominations ensure that your assets are passed on according to your wishes, minimizing the risk of family disputes and legal hurdles. If you find our content valuable, we kindly invite you to subscribe to the channel to stay updated with our latest videos.